So Logan, welcome back. It's been a little while. I saw you at the last Housing Wire event, but since we've had a real conversation, I'd like just an update on the market. What do you think? What are the big moving pieces since then?
I think for me, the 2023 housing market, I'll always remember it just for this aspect. Mortgage rates recently went up to 8%. I've kind of have my own little model. If mortgage rates got above 7.25%, then the days on market should grow, inventory should grow faster, price cut percentages should pick up a little bit. And during the entire time when mortgage rates were heading up to 8%, got to 8%, stayed there for a little bit, and then went back down, the inventory growth rate did not pick up, not for 1 week, as I thought in 2023. The price cut percentages, even in the second half of the year, which is seasonally weaker, stayed consistently 4% below, even with higher home prices and higher rates. So to me, the stabilization that we saw toward the end of 2022, even as mortgage rates got up toward 8%, still somewhat held its ground. And inventory for the last few months have been negative year over year. We've got there slightly positive. It took 8% mortgage rates just to even get to that level. And now mortgage rates have fallen. And while mortgage rates were falling, the market shifted, right? We just saw for the first time in a while, 3 straight weeks of positive purchase application data, right? It's not much right now, but just like it happened last year at this time in November, December, the market dynamics shifted. A lot of people chose to ignore it. Purchase application data was rising because total active listings are still low. People just kind of didn't want to focus on that. And we're almost having the exact same thing again, except this is with higher mortgage rates and higher home prices. So I think that is, to me, the structural difference about this year versus 2022, where toward the end of the year, home sales were crashing in the fastest fashion ever. Price cut percentages, the slope of that curve went up so fast. The inventory curve went up so fast. And having this test in 2023 with 8% mortgage rates and home prices getting back to all-time highs really shows how the market dynamics really structurally shifted and held it even with higher rates. And that's going to be more interesting, especially if mortgage rates keep on going lower again. Then we have somewhat of the same dynamics we saw late 2022, early 23, where demand picks up, whatever inventory is out there gets gobbled up, and it does not allow inventory to grow in a faster fashion considering where demand is. And that's that tug of war. That's the homeowner that's doing really good. New listings data still is trending at the lowest levels ever. And this is the housing market of 2023, and it got tested with 8% rates and is still held intact.
All things considered, it seems like a stable market today.
It really is, and part of this is what we do at Housing Wire. We track live weekly data. By the time our data line hits the traditional media outlets, it's already months too old. So while we were very adamant about looking at the data when mortgage rates were rising, and we just didn't really see the breaking of the housing market. Normally, what you would see in this, if the housing market was breaking, is new listings data going straight vertical, right? People rushing to the markets to put their homes. New listings data has been trending at the lowest levels ever recorded in the history of America for the last 60 months. Now, the positive side is most sellers are buyers. So we're starting to see new listings data show some growth year over year, still trending at the low levels, and sellers are buyers, right? Majority of them are. So in that case, the inventory channel was just so much more stable this time around. And considering that mortgage rates got to 8%, imagine a housing market if rates go back down to 6%. Right. So I think that's the thing we have to focus on for 2024 is that if mortgage rates keep on going lower, and the history of economics have taught us this outside of maybe 1978, that when the market and the Fed believes it's done hiking rates, typically bond yields rally, which means mortgage rates go lower. That's been the cycle out here. So if the Fed is truly done and the economic data is not going to outperform in a strong sense, there's a good case for lower mortgage rates, for more duration, not heading back to 6 to going up to 8%, and creating a little bit more stable atmosphere for buyers out there to make some choices. And since existing home sales are so low, you can see growth in sales. next year if this is the case. And we saw what happened last year, November, December, January, 3 months of positive purchase application data as mortgage rates were going lower. It gave us one of the biggest month-to-month home sales print ever recorded in history. So this is what we're tracking on a weekly basis. But boy, to get that test with 8% mortgage rates and higher home prices, boy, that really shows how the market is so much different than what 2022 was.
We just did our big flip side report. We do it, generally once a quarter. 200,000 real estate investors, independent investors on the platform, and we surveyed them. This time, we collected information on about 800 prospective home buyers, people who are actively searching for a home. Some have purchased, some are still searching over the last 12 months, just to get their take on it. It's very interesting. Half are millennials, of course. If you're a millennial growing up through 2008, the American dream of owning a home, it went a little sour, right? We expected them to be lifelong renters, all these things. I guess where I'm going with this is 79% of those prospective homeowners, they were not able to purchase a home. They were actively looking. And obviously the big hindrances there were rates and, no surprise there, but just being able to find a home. Obviously there's a major inventory crisis. So you mentioned this tug of war. It seems like, really for the last 10 years or so, there's just been this pent up demand for housing. Do you think that's going to continue? What's the future look like for that? Does 2024 look like it's going to be a bit of a rebound year? Maybe if rates drop and people can buy again?
The difference between, let's say, 2007 and 2012, I always have this skit the last 10 to 12 years. We're not very complicated human beings. We rent, we date, we mate, we get married. 3.5 years after marriage, we have kids. Home buying gets into the equation. Ages 28 to 35 is the biggest demographic patch in America. People get married later and they have kids a little bit later. So we are like in the sweet spot. Yeah, like years 2020 to 2024 were like the sweet spot ever in history, because a first-time homebuyer doesn't provide you a house, right? They're buying what's available out there. They also finance 90% of their homes. So mortgage rates matter to them more. Where people ages over 58 and over, almost less than 50% of the homes they buy are financed. So they're to a degree insulated compared to millennials. But as mortgage rates fall, right, you just get more of those buyers into the mix just because of the sheer size of them. And because existing home sales are trending at the lowest levels ever, like when I say ever, I mean, I take the civilian workforce and we have over 157 billion people working now, right? Existing home sales rarely get under 4 million after 1996, but we got there with 8% mortgage rates. But every single time after 2010, when mortgage rates fall, and they fall with some duration, demand picks up. And here we are again, mortgage rates fell, from 8% down to 7.32%. And we've had 3 straight weeks of positive purchase application data. And a lot of these are young millennials who are just want to buy a home like they've traditionally, like the boomers did and Gen X did and everybody. There's a certain age where if you have the incomes, especially dual household incomes, you can grow sales, and it doesn't take much to move the needle. We look at the new home sales market, like today we got the report, they're up 18% year over year. Even rates going from 8 to 7.32% has already changed the market dynamics in the last few weeks. So we keep on following the weekly data, the forward-looking data. If rates keep on going lower, then yeah, we're going to have a positive year in 2024. Just because the bar is so low, we can all trip over it.
Real estate investors, I don't know why I'm always surprised when I see this, but they seem to be optimistic about the future every time we pull these reports. Maybe I'm just used to reading the headlines and I need to get closer to the field every day, but they're still very optimistic. Our, New Western, we've seen our growth at New Western really outperform the traditional market. And I think that's indicating, the investor segment at least is much more buoyant in this market. It's much more stable.
You know what? I gave a perfect example for somebody who was asking me, how are investors even in this ballgame with home prices and rates so high? And I said that investors are very crafty and they're smart, right? They're not in the business to overpay for something and not get value for their dollar. So there are people out there that are buying homes for like $70,000 that nobody wants to move into or buy. They put about $17,000 to $20,000 fixing it up. Then they could sell the home much higher or even rent it out at a level. So those kind of investors are what I call like the quiet assassins, right? They kind of find the good stuff that nobody wants and they're paying very low, and then they create that kind of value. So if you're in that category, what's not to like with active inventory down here, right? Because you're doing something that most people don't want to do, and you can actually make money off of it, right? So it's everybody thinks that all investors are all paying top dollar for something. No, investors are clever, right? They know what to do. And in this kind of environment, as long as active inventory is still low, they have less competition, and they can also provide something that the market doesn't do on its own. Provide a cheaper, more affordable product and still make money off of it, right? I think that's the benefit about investors in this kind of marketplace. As long as total active inventory is still low, guess what happens, right? They find a product, they don't pay top dollar for it, they put some money into it. There is your affordable housing, or a much more affordable rent than what the market can provide. So I think
30% below median income, at least on the Western marketplace.
Yeah, so I think that's
30% below median home prices are generally. I mean, it's defined. That's how you define affordable housing. There's no alternative.
So that's. I'm surprised this still doesn't get enough attention like it deserves. But if you're a buyer, boy, that's the marketplace a buyer would like to go into.
I think you just can't see it, most people, because you see these headlines, investors are slowing down. You open up the article, you read it, and they're talking about invitation homes. They're talking about this little segment, this little pool of institutional investors, or they're talking about the iBuyer space. Whereas, 85% of the market, they're these independent real estate investors. This is a small business, right? That's not showing up on anybody's radar.
Do we really want other people to figure this out? Because you get more people coming into this, because the product is so much cheaper compared to what the market is. It's a good deal for both parties here in that light. But
megatrends that are all aligning. You've got 15 million vacant homes in the U.S., right? A lot, or 15, and a lot of them are vacant because they're distressed and all that. You've got more coming, right? Because we've built all these homes leading up to 2008, more than we've ever built. So there's 25, 30 million homes that, they're aging. The people inside of them are aging as everyone's aging in place. So you've got this inventory coming that really takes a local investor. I mean, it's a sweet spot for them, I think, right now, because if you're one of these large institutionals, I mean, you think about everything that can disrupt you. Those are slow moving ships, the securities market, all these things that they have to time to get right. Where if I'm the local guy and I'm operating in a neighborhood that I know and I understand, I mean, I'm going to fit into every single little crack as it forms to fill it up much faster than anyone else can mobilize.
I always thought that was the biggest advantage of small investors, local, right? You think of a big Death Star, big and clunky and slow, and it takes forever to get something done. But someone localized and know how much to really pay for a property and know, okay, I'm going to put X amount in here and I know I'm going to get this. That's an advantage, the big Death Star can't have. So that I try to explain this. People go, why are there any investors? Oh my God, there's still people making money and providing affordable housing. Right, and then you see this, just putting X amount in the repairs and then fix it, and it's unbelievable value right there for both sides. And I think that story gets completely lost, because literally we have spent 8 years saying that Wall Street was buying all the homes, even though they were just this small percentage of the world. And it's still, even today, people say, well, the only reason housing is holding up is because BlackRock owns all the homes. They own 0.03% of all the housing stock out there. But it gets all the attention. And this is kind of if it bleeds, it leads. But on a mathematical basis, it was never true. So I think that's the advantage from the smaller investor. They can go into a marketplace they know not to overspend, know what the marketplace can give you. And this was with higher mortgage rates during this entire time. Now mortgage rates go lower. Guess what? The one buyer that actually has to finance and needs affordable housing, first-time home buyers, millennials, there they are. And we've seen that in the data. Every time rates go lower, demand picks up. So much different dynamics than what we saw from the 2002 to 2005 credit boom and the 2005 to 2012 inventory blow up, where massive supply was coming into the market because of distressed sales, what we call forced credit sellers. Don't have that. Distressed sales are still very small. Foreclosure data is still very low.
Nothing. Yeah, and they report about it every time it doubles, right? But
yeah, I know.
We surveyed 800 prospective active home buyers that are looking for a home, 20% of which were able to transact. I mean, they just can't find homes. If I'm a real estate investor, days on market, 30 days right now, prices stable. You know, if rates start to drop, it's just more upside. As long as you can find the inventory, and the inventory's out there, it's distressed, right? And more of it is coming along the way. So it seems like near term, midterm, fundamentally, seems like we're pretty good right now.
Yeah, to me, the housing market really revolves around the 10-year yield. So that drives where mortgage rates are going. And, we had a really good test with 8% rates. And if inventory had been skyrocketing and sales kept on crashing and price cut percentages were rising, that we would have a different conversation. That did not happen this time, and rates have already fallen. So this is the thing about housing. Housing can move like this within weeks, so you have to be able to track things daily and live weekly, because how we always say we look forward in our data. By the time it hits the sales data, it's months too slow.
Yeah.
And it was a very interesting shift that we did not see the housing market deteriorate even with 8% rates, and now that mortgage rates falling. Very low bar of sales. You can grow sales from here, and if rates keep on going lower, just think of that major workforce, all those people working, sitting there waiting for rates to go lower, and everyone's in that same boat. Boy, okay, now I can afford that payment. Let's go. Boy, there's not that much active listings out there. So that other person, you have all these people. It goes back to what I've always talked about after 2020. Too many people still chasing too few homes, right? That was the whole concept of my work after the summer of 2020. And we can see it in the data. It's still hard for people to believe how low inventory is in relationship to the total population and workforce.
Went from a supply problem in 2008 to a demand problem today.
Yeah, completely. You cannot get two more different housing markets in the history of America than what we saw then to now. I always reference 2008 versus 2023. You could just see the dynamics shift on one area. It's active inventory.
I'm sure you'll be making that point to somebody on Twitter later today.
Yes, I will. I always do.
Well, it's great to have you.
My pleasure. My pleasure.
I'll see you at the upcoming event pretty soon here as well. The next one in Phoenix this year.
Yes, it's in Arizona. Yes, so it's going to be one where we have the real estate agents and mortgage people to come in together. It's going to be our one event of the year where we're going to get everybody in, and we're going to have lots of data. We are so excited about that one.
I like the shift. I've been to the previous ones, and combining them, I can't wait to see the different crowd and how much larger it's going to be. So we'll look forward to seeing you then. Thank you for your time. I appreciate it, Logan.
Pleasure is all mine.